Good day, all. Ira Epstein with your SPDR ETF wrap-up. And this wrap-up is for Tuesday, and we're now at the 7th of September, 2021. Well, what a way to start the week. Everything didn't look to me like it was going to break as much as it did, but when we step back here, all the stock indices, with the exception of the NASDAQ, got hit. Now, the Nikkei was up nice too, but this was up, but SOX down, SPY, DIA, number of them lower today. You can also see that you have a certain amount of, in the gold market, a negative. What happened? I'm not sure. Came in. Gold certainly is a major failure. It had a big chance to be very good. It failed at its upper Bollinger Band, and this pullback has really hurt the market. Now it's got to rebuild, according to my work, how the chart action looks. When you look at ARK, the market's back up into this resistance. Now, when we had broken for the Labor Day weekend, and I'm talking broken being we took off for the holiday, this was the market coming into this zone, and if I step back, you see what I mean. We had just come into there. That's where I'm looking for the resistance to start showing up. So the market did offer the first level of that. The pattern is still bullish as you have higher highs, higher lows. The resistance, well, it's not here at the 200-day. That's going to be support on the next test in the market. If that gives ground by much, then I can look back, maybe that we're going back to the 18-day average of closes. The resistance, the upper Bollinger Band, and it didn't make it there. Doesn't mean it can't make it there, but it didn't on this first surge towards it. But the market's not through. Now, let me explain this. Markets, when they get overbought, have a choice as to what they want to do. Overbought conditions happen when the market action gets either of the number over 70. Once they both start getting over 80, the game starts changing. You have the potential to convert from being overbought to locking in a bull trend. It takes a minimum of 3 days of that to occur. You can see that you don't have that right here. You have 2 days. Tomorrow's going to be a crucial day for me in that market. I'll be watching that very, very closely. Apple continues up, overbought. It's been riding, I call this the gorilla glue trade, because the market sometimes will go up to a Bollinger Band and just travel either side of it, hitting it every day. It is a sign of strength, not a sign of weakness. It often pulls the momentum that makes up the slow stochastic. They're called a K and a D line. And the difference between the red and the blue line is one is 3 days worth of value. It's a daily chart, so it's 3 days, and the other is 5. Same formula, time frame expanded on the two lines, and therefore the red always moves around the blue. When we look at PAVE, I've told you, I think that this is in trouble because if Congress gets back soon and they start discussing what to do, President Biden has certainly created an issue for himself and for his fellow Democrats, and now the battle is on. Plus, Joe Manchin is saying very clearly he doesn't want to go for the $3.5 billion reconstruction plan, which puts the infrastructure plan in danger because people in Congress don't want to separate the two. We'll see what happens. Now you're just doing these waves in the market back and forth. In the industrial sector, you went back down, didn't even pay much attention to the 100-day average. It closed today near the lows of the day. If the market drops from here, and it's got the play to do it, I would think that you're going to the lower Bollinger Band as a minimum. But this market hurt and hurt bad. Can't answer to you why from the set of fundamentals. In the semiconductor, you have an embedded reading, you have an outside day down, and the market had earlier hit the upper band. So backing off to be expected. Now you keep your eye on the red line. As long as it doesn't close under 79, I think you're going to attract buying on this break in that market. POTX, big resistance right here. You've come off the lower Bollinger Bands when you got under it 4 days in a row, and then major pop, went right to the resistance. I call the red line the line in the sand on all the charts. Why? Chartists like to look for neutral points, and moving averages offer that. Depends how you learn to work with them. They can be support, resistance, and a neutral point. There's three different things they can do. And in this case, they're the resistance point while being neutral. All you did is rally up to it. And when the market is underneath the 18-day average of closes, it defines bias the way that I teach charting. Market under it, my bias is down. So I could get all the bull signals I'd want from the swing line going up, but if you have the bias down, the two counter each other, and that's what's been going on. In the home builders, what hurt the market today is interest rates are rising again. We're back up to the 137 level in the 10-year note. That's not a friend to housing. And the market had been, just follow me here, how many days did you have over 80? Neither. Both were not over 80. 1 day. 2 days. So what do you have to do today? You have to have the third day where you stay over it, and more times than not, you don't embed. And that's all that happened. So you're in a correction phase. I'll still look for the 18-day average to be what the market wants to bounce around. In the energy sector, energy's got set back with a combination today of the strong U.S. dollar, and the Saudis offered the Asian market a good discount on crude. That seemed to have come out of left field, and when they did that, the market never looked back. The combination of the dollar and that discount, prices sank right back down. So that's what I was looking at. Emerging markets still looking good. I did a piece for Bloomberg today. They're asking me what happens if U.S. interest rates go up via the tapering. And I said, it'll be difficult for emerging markets under that scenario, a strong U.S. dollar. Now, it depends if you have that where the economies aren't picking up. If all the world's economies are picking up and the dollar's strong, that scenario doesn't stay that way. So you're at a tricky point right here, but the trend is certainly up. Now, there's something very important. When you look at this, you had an outside day down. My rule, and I'm doing a course on this, when you take out that high within 2 days, you're putting right into play the closest moving average or the upper Bollinger Band. And it's exactly what the market did. In the gold market, a massive failure. You had a market here that's over it's embedded, it's over the 200, the 100. All you have to do is not break through these last lows. If all that means nothing, you have a problem. You went through it and right back to that neutral number. You destroyed a lot of good chart action in this chart. And probably people are disgusted with gold because you're not getting the play there. Now, Bitcoin didn't act that good today, or Ether. They both got hit very hard too. It's like everything that had worked, people came out. It's a strange day. But, you start these trading seasons in weird ways. Higher lows, higher highs. Where do the gold miners go right on this day on Friday? What do I teach if you took the Enhanced Bollinger Band course? You want to take that course. It's on our website, www.iraepstein.com, under the word education. But that would have been the exit. Look at that. Feel pretty good about that. TLT, this would be the exit on the downside today. You're going to go, what? Interest rates coming down? Well, you hit 146.66, 146.72 is the lower band. As far as I'm concerned, hit the highway. You're not embedded, you're oversold. The market's hit a downside target. FXE. So the euro currency, it looks to me like it's going to roll over with the dollar getting stronger. How many days do we have over 80? Day 1, 2, 3. It's embedded. Now, when it reopens, if that red line drops under 79, you want to back away and let the market prove itself. It's always easier to come in after the fact. This is not a buy day in this market, and that's how I walked away from it. We talk about what I think is a buy day, a sell, where do you put the ideas in? Well, you see what I'm throwing at you, the trade ideas? That's what I do for my subscribers in the morning. I start recording now at 9 o'clock. I used to do it at 8:30, but 9's so much easier because we get so much economic data that comes out 8:30 Chicago time to 9 o'clock. And then on the weekend, like I did on this weekend, I make a weekly chart version, only looking at the longer term off weekly charts. So each one's about 20 minutes long. Look at what I cover. Tell me I'm not covering a massive amount, and I'm always adding, like Amazon's now in the other. I'm going to add Facebook back. I want to get back into those. And that's because I'm looking at what the Christmas season, everything else coming, and there is a certain synergy there between holidays and what goes on. Inexpensive? Come on. It's a tick. What can I tell you? It's $8.95 for the first 30 days. You're getting 24 videos a month. Pretty good deal there. How do you get it? Just go to our website. Now, we also have a combo offer. You want to look at that. And last, if you're still with me, up here, you see this icon? That is the webinar. We're holding one tomorrow at 12:30 p.m. Central Time. Just click on that if you didn't already get my invite, and I'll see you there. We open sharply at 12:30, and I end at 12:50. I do not record them and post them anywhere. I want you to attend and bring your questions. I'm Ira Epstein. You have a great day.